Good morning, traders. It is 8:01 a.m. Chicago time on Thursday, the 15th of June, 2023. We're in the middle of the month. Thanks for joining me. This is episode number 2484. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Tell me that the sound is crisp this morning, although I'm having to use my headset instead of the fancy mic. Um, this morning, really, let's pop on over to the convergent trading pre-market summary sheet. The Fed decision is behind us. The Fed fund rate had priced in by the end of it 94% probability or 97%. I don't remember, kept fluctuating between those two numbers. And they were right. The Fed did hold. The market took that and didn't know what to do with it, just blah, 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 all over the place. And interestingly enough, the S&P closed below its point of control. The Nasdaq finished strong. The Nasdaq finished near highs, and the Russell was very busy yesterday. So we got what we wanted. So the Fed held rates yesterday, but expecting further hikes. The dot plot was the bigger piece. If you're a Convergent member, you probably saw the comments I made before the release and after that. The dot plot, it shows at some point, it shows instead of 5.1 as a terminal rate, it shows 6.1. So that's why you saw some selling and some kind of frantic activity there, apparently. Um, and so, the dot plot showed that down the line, um, they believe that further hikes will be necessary. But for now, they're holding where they are at 500 and 525 basis points as a range, as a target range. And what that does is it puts pressure. It keeps the Fed's knee on the economy's throat when it comes to short-term rates. So, the commercial, industrial, that sort of side. Um, Manufacturing, tech, those are all impacted, construction and so on. And it keeps that pressure on. It's not relieving that pressure, and it's their stance is to wait and see how the numbers shake out. Does the market kind of absorb this information and keep chugging along, and we continue to get a strong pressure from employment and prices, in which case you would see a resumption of the hikes, or does this truly slow things down? My opinion is it's probably going to get absorbed. I mean, this thing is just a runaway bull market. It has been for 12 years or so. And being a 5%, historically, 5% would be considered a pretty normal rate, and because we're used to 0%, 5% seems like a crazy interest rate, short-term interest rate. So anyway, ECB hikes rates this morning as expected, and we got U.S. retail sales. They were in line today as they came out. Those of you who trade the euro probably sat through the ECB press conference, but we did get retail sales today. It came in at 0.3%, stronger than the negative 0.1 expected. Retail sales ex autos are 0.1%. So if you remove cars, we dropped 20 basis points on sales. Tells you the pressure there is on automobiles. Currently 0.1%, in line with 0.1%. Import prices and export prices came out, as well as Philly Fed, which used to be a big number, by the way, back in the day, came in at negative 13.7, expected at negative 14. So basically in line. Claims came in higher. So softer employment there, 262,000 versus 249,000. Those are the big things that we need to pay attention to. Again, the ECB press conference is going on right now. We get industrial production in about 10 minutes, and then we get business inventories at 10 o'clock Eastern. Um, and business inventories, it's probably not a mover. Not much is going to be a mover going forward, to be honest with you, now that the Fed is behind us. This evening, we also get Bank of Japan's rate decision. While the Fed has decided to hold, the ECB decided to raise, China decided to cut. So polar opposites there. Very interesting environment that we're in. In addition to that, New Zealand had 2 quarters of negative GDP growth. Officially, that's considered a recession. A small economy, but a bit of an indication that the policy by the Reserve Bank there is working. The bank is looking to push. See, it seems to be aiming to push that economy into a bit of a recession to cool things off. It's a heck of a way to cool things off, and that's what they're doing. And that's what we have. So there's not much more to talk about there. This is not actionable information, of course, but this gives us the background, the context, the picture behind the bigger flow. I think it would be ignorant for us as traders to ignore what the big pieces are doing, and then what we do is zoom in through our charts into what the price action is. The S&P currently has a multi-distribution profile. It built a nice distribution of 44.14, which was an important price from yesterday, and then it shifted the point of control to 44.03 quarter, so against 4400. So we're still dealing with the 4400 here, and we pushed through 43.96 was the low 2 days ago. We pushed through that yesterday, and we were kind of bouncing off of it this morning. So there's a lot of structure as a result of all the movement that we got yesterday. There's a lot of structure. The market should be a little easier to read today. Let's take a look at the charts. So yeah, 222,000 volume, pretty good volume this morning. I was going over some of these stats with the Convergent members this morning. The S&P 500 is at 141% of relative range at this point of the day. It is at 110% of relative volume relative to the 20-day mean, the 20-day or the 20-session mean. I shouldn't say day because we work in sessions, not days. So when I say relative, it's comparing the current time as we speak to where it was versus the mean of the last 20 sessions. So relative range for the S&P, 141%. Relative volume, 110%. The Nasdaq's at 153% of relative range and 113% of relative volume. The Russell, 142% of relative range and 114% of relative volume. And then as I go down the list, I'm seeing heavy euro range and volume. Euro has 144% of range, 112 of volume, and then the Japanese yen, 182% of range, 149% of volume. Gold, 123% of range, but 167% of volume. I don't have silver on this commodity chart. I should probably add it. Silver's down 2.32%. Gold is down 1%. Crude is up 1%, 1.3%. So that's the big picture. Let's take a look at the charts here. Let's move on over and have a look at where we are. So we had that balanced day Tuesday. We had a breakout day Monday, late breakout. We continued. We left a gap, and we talked yesterday about the idea that if we break below 4,400, we're really looking for it to extend down into and towards 4370, which it could not do. It managed to get down below, fill the gap, and work its way through this weak structure from Monday, but it just could not push further. You could see in the order flow, actually, as it was dropping, that it was putting in big red dots, big red dots, big red dots, which means that there was volume there or there were bids there to hold price. So let's look at that from yesterday to so as it pushed lower, every time it pushed lower, where was it? Man, there was a lot of activity. Look at these bars, tons and tons of bars. Here we go. All right. Sorry, I have a bit of a cold. There's 43.83 right there. Let me clear my screen. 43.83. You could see that it's squeezing down. There are little sweeps in there, squeezing down, but we're getting these big red dots as we push down. And I did warn traders at Convergent that this is looking, when it came down here, that it's starting to look like it is basing and the low is in, and that happened to be correct. It pushed to 4,400, pulled back for a higher low, and then started driving up. But as it was pushing down, you could see a cloud right there, a cloud of red dots. This is basically liquidity that is remaining put on the bid. In order for those red dots to show up, there has to be something there for those trades to slam against. And, if it's not there and it's being pulled because buyers are fearful, then you wouldn't get that dot, because there wouldn't be enough liquidity and price would just slip through, which we saw quite a bit of yesterday. I showed a sample of that where you have a print right there. You have a print right there without any volume at all. This is bids being pulled and the market kind of slamming through or sweeping through. And so as you start to see these red dots at the lows, you have to start to be cautious as it starts to kind of rotate higher. So the action yesterday was relatively clean, in my opinion. It see those red dots right there, boom, boom. It was relatively clean, pretty decent rotations, and it came all the way back into the IB, back to the open, which brought the delta. If you look at the delta here, as it crossed the open, it brought the delta back to zero. So what you had is aggressive volume and price moving together yesterday. So that, in my opinion, makes it easier to trade. Here's the close as we approach. The closing imbalances occur right in here, and here's the close. This is why we never fade the close. It can really push through. And then since yesterday, so it's settled right there, okay, 44.1850, and then it continued to move up into the Globex close, which is at 4 o'clock Central, 5 o'clock Eastern. We reopen, and since then it's been weak and it's been surfing the VWAP from the downside. We're right up against the VWAP. So what we have today is no balance. We have a multi-distribution. We have a market that's in an active discovery mode, and there's pretty good opportunity here today, in my opinion. The only caveat that I see this morning to the trade is we are hovering around that 4,400, which is just a pain in the ass because so much goes on around these major strikes, and so you'll see a lot of activity around these areas. It's marked in yellow here on my chart. Very important area to stay away from, to scale in front of if you're short, and to scale in front of if you're long as well. But so far, respecting the full session VWAP, we're holding the point of control at the lower end of the range. So the LIS, the line in the sand this morning, is going to be the 44.10 to 44.12. How it treats that this morning is very important. We have multiple distributions here. Yeah, it's happening. Multiple distributions here, And let's have some ashes fall off as the smoke rises. Multiple distributions here, and the line in between the distributions is very important. This low volume node becomes our um, our LIS, or line in the sand, or over underline, whatever terminology you want to use, and that coincides with the mid for the session, the mid for the full session, also the mid for yesterday's session. If it starts to climb above, then the high of yesterday is threatened, and then we start to move into the 44.33 area, and so on and so forth. And you start to melt up into the bigger composite figure, which is 44.56. So if we end up 56.50, it's shown at 57 on Edge Pro X here because of the way this does the adjustment. It uses the close versus settlement, and it can be off by as much as 6 ticks or so. Not a big deal on a daily chart. Don't really care. It's good enough for me. So then we're looking at the 44.57. So if we take out this 25 from yesterday, so if we get through this morning the 10 to 12 that we're attacking right now, if we get through that, let me reset the settlement. If we get through that, then what it's likely to do then is really squeeze yesterday's high at 25, and then 34, 34-ish becomes the next key area, 33, 34, and then from there, it's really open to 56 and a quarter, 56 and a half, and that would be the next area. So if you're long, you're going to want to just take your scales, cover your risk, and just kind of hang tight in there, because if it does clear yesterday's high, you have a pretty good base of action to push through. So you want to hang in there. The better trade, of course, as you all know, and I always say, is the surprise trade, and that's to the downside. You could see it held the levels that I put in here. When was it, last Friday or something in this region, and I updated them Monday and Tuesday. You can see it held them okay for the most part during yesterday's FOMC release, and we are here sitting between this 44.20-ish area and the 4400. We're playing in this area, so I want to see that it takes the 44.10 to 12, and if it does, then it starts to push yesterday's high, and if it pushes yesterday's high, we're looking at 44.30-ish right up here, this high volume node. The VPOC from yesterday, the VPOC from yesterday, sorry, I'm talking about 25, the overnight high. I'm confusing you. Goes for the overnight high. Then we have this 44.30-ish, and then from here, it's clear to go to 56, 57. And so we would want, once it clears this area, this 12 area, and pushes through, we're going to want to find a long or lean long. Not worry about the short side, not convince ourselves of why the long won't work. Just keep a clear mind so you can execute, and then put the trade on, manage risk back into the prior settle, and then squeeze through the overnight high. And once that happens, it's likely to push through yesterday's high and into 56. That's the key. So that's where we stand here. That's it. I don't see it going lower, in my opinion. Given yesterday's action, we had really clear evidence on the close that prices were rejected. You had a nice big impulse down. This was a really, and by the way, that move down, that bar right there, was highly contested. Highly contested. There were a lot of bids trying to hold the low and squeeze, and they just had no capability. If you traded the FOMC, you would have noticed that there was some size that came from above. If you replay it, you'll notice there was a 90 lot that came down and absorbed a bunch and became 75 offered just a few seconds before the FOMC, and it just kept going down, and then it reloaded and kept going down, and it reloaded and kept going down. There was a lot of pressure, selling pressure yesterday, and buyers kept trying to hold it up, and so it was contested all the way down and taken right back up. So you'll see the white candle, this white candle right after it, is just a clear technical indication that those prices were absolutely rejected. The gap was rejected. The zone from earlier, from Monday, that rally zone was rejected. There was poor structure there till 43.70, this next area down, yet the market came right back and pushed right back to the point of control that had formed earlier, and then finished below that point of control, showing a little bit of weakness there and most likely balanced. So to me, it looked like it was likely to balance into the close, but there was a lot of volatility into the close as well. So to me, if it does push and squeeze this overnight high, then there's a lot there. There are a lot of shorts there to squeeze out, and which would fuel the rally up. And that's the biggest thing you need to be mindful of. The Nasdaq had a different story. So again, same levels. They've been here a while. It pushed into the support, strong move down, but it was immediately refuted, immediately rejected, comes right back into this 15,100 zone, which we were at this morning, and you could see that it held these, put in these bottoms against that 15,100, and it finished near highs. So settlement near 15,200 in the Nasdaq, relatively stronger. And the NQ is really right at the point of control, is in a much better position to squeeze yesterday's high and to continue to 15,300, 340, I think is the next area up, 15,340 or so, which is about 200 points higher, which you can attain today. I know I'm covering a lot and I'm speaking quickly, but there's, when you have a lot of movement like we did yesterday, there's a lot to talk about. The crude had a nice little pop a couple of days ago, but it's not able to hold above the 70. The 70 has been a killer for this thing. You can see this line here, just it tries to push and it just cannot hold the 70. And so if we see it get above the 70, pull back and hold the 70 for a continuation, our mind's going to change and we'll look for 72 next. We'll look for 72 next, and if it takes the 72, 74 becomes the next key area. It'll bring us to the other side of balance, 72 being the mid of balance and the mid of the range. And, it's the most accepted price in this area. When you zoom out, you can see here the point of control shifts. I can't zoom out enough in this time frame, but you can see the point of control shifts up towards the 72. It actually comes to the 72. So for now, if you're a crude trader, any retest of 70, you have to assume is likely to be refuted, unless it takes it out and pulls back to hold. There's really no point in trying to swing long this thing as it sits. Now we do have a higher low here, but so far crude has had a hard time holding on. And RTY has seen some really good action lately. Yesterday it sold off pretty good, but it finished relatively weak. It finished below its mid yesterday with the settlement in the lower half of the range. The Russell's slightly weak, but it used to be just dead like 2 weeks ago. It really woke up when it broke out of this range, and it seems to be getting a lot of flow. I'll leave you there. I know that's a lot to cover in 25 minutes. But a lot has happened. Good luck. Please hit the like button. Don't forget to subscribe to the channel if you find this useful so that it can rank higher and other people can find it. Good luck, and I'll catch you tomorrow morning. Take care.